to a new video of Parpella. Today we are going to discuss the basics of share and stock market for beginners. I know what you are thinking. Many of us feel like these topics can be difficult to understand and execute. But that's not the case. When you have an idea about the basics, it's easy to understand and follow. Also, there is a common misunderstanding among most of the people that a stock market is a trap and one can only lose money in a stock market. But that's also a myth. If a country is performing economically well, its stock market will also be moving upwards, giving the fair returns to the investors. Now, let's move on to the basics of stock market and how it works. The one thing that we should keep in our mind while talking about stock market is that there are lots of participants in the stock market. Let us look into some of these. These are listed companies, stock market, brokers, investors, and much more. First and foremost, let us discuss the definition of stock market. Stock market is a place where the shares of listed companies are traded. In simple words, it is a place where the public listed company's shares or stocks are traded. They are bought and sold in this place. Now, let us look into the definition with an example as we always do. The definition says that the stock market is a place. In India, the main two stock markets are NSE and BSE, that is, National Stock Exchange and Bombay Stock Exchange. So as per the definition, the place where public listed companies trade their shares is known as the stock market. Next, let's discuss about public listed companies and what are the shares of public listed companies are. Imagine that I own a boutique. I sell occasional, traditional and western wears. My boutique is a huge hit among the society and I can acquire a huge profit from my business as well. The value of my business is called valuation. When we divide the valuation of a business into small units, these units are known as stocks or shares. To simplify things, let us imagine the valuation of my business is 20 lakhs. When we divide this into 1000 stocks, the value of each stock becomes 2000. So to brief, the valuation of the business equals to the number of shares multiplied by the value of each share. Now, if you're someone who already has an investment in the stock market or if you're planning to invest in the stock market, you will need two accounts. The first one is a trading account and the second one is a demat account. Let's discuss about trading and demat account. A demat account is an account which is used to hold shares and securities in an electronic format. A demat account can also be used to hold shares, mutual fund units, bonds, IPO, debt instruments, etc. It is opened online with the help of a depository participant. Many banks offers demat account services to their investors. Opening a demat account is a hassle-free process that can be carried out from the comfort of one's home. Now let us move on to a trading account. A trading account is used to buy or sell equity shares in a stock market. It makes the entire process of share trading more faster and secure. If you need a transaction of any kind, you will need an account and this account is known as the trading account. So if you want to buy or sell shares, you can do it through a trading account. But to deposit cash in the trading account, you must have a bank account. So make sure your bank account is linked with your trading account. The main difference between a demat account and a trading account is that the demat account is used for holding stocks, bonds, mutual fund, exchange traded funds and other securities, whereas the trading account is for buying and selling of shares in the stock exchange. The word market can have different meanings, but mostly it is used as a catch-all term to denote both the primary market and secondary market. In fact, primary market and secondary market are both different terms. The primary market refers to the market where securities are created, while the secondary market is one in which they are traded among the investors. It is important to discuss about the primary and secondary market because it is the key to understanding how stocks, bonds, and other securities trade. Therefore, let's discuss about the primary market and secondary market. First, let's talk about primary market. The primary market is where securities are created. It is in this market that the firms sell their new stocks and bonds to the public for the first time. In a primary market, investors are able to purchase securities directly from the issuers. Types of primary market issues include an initial public offering, a private placement, a right issue, and a preferred allotment. Now let's discuss about secondary market. The secondary market is what typically referred to as the stock market. It is where the investors buy and sell securities they already own. To invest in a secondary stock market, you require a demat account. As we already discussed, a demat account should be linked with your bank account. It's time to talk about brokers. Another component necessary for facilitating the investing or trading of shares and other instruments in a stock market is a stockbroker. General public cannot deal with shares and other instruments directly in a stock market. This is the scenario where the intermediaries known as the stockbrokers come into play. It is through the account opened with the stockbrokers that the general public can deal with shares and securities. Several players such as Zerodha, Upstocks, Geojit, etc. are there in India as stockbrokers, and an account with any one of them is necessary for stock trading. I hope this video was informative and helpful. I'll see you in the next one. Till then, bye.